Hi, this is Rob at EdgeStocks.com. Thank you for joining me for the EdgeStocks update for April 2nd, 2010. I had gotten an email this morning regarding some previous trades. One of our members had told me that he had taken a trade in IMO, Imperial Oil, and he was very pleased with the result. I think the purchase was right down in here. But then he went on to tell me that he had gotten out early on the trade, and of course today the stock is up another 3.29%. And what I wanted to talk about is how risk-reward ratios can affect your trading. If you cut your winners short, then when you do have your losers, it's going to not be as good for you to make up for them because you've left out the huge gains. And often what I say trading that happens is you want to wait for a good accident to happen, and that's what we're trying to do. I know that sounds like a horrible thing to say, but the fact of the matter is that's what it is. And so what we're trying to do with the Cycle Vision program and Edge is we're trying to stack things up in your favor so that when you trade, things are a little bit more likely to go your way. But when you get one that's running, it's not good to take targets on it because your losers might run too, and you want to try and cut those short. The old saying is, let your profits run and cut your losses short. The problem is, it's convenient and easy to say that after the fact, but while it's happening, it's hard to do. So, if you do get into these stocks and they are showing good gains, why not, set a break even or a couple percent gain and see if it'll run. And trade it out, because I think the recommendation on this IMO did not get out until the 8th of April here. So this stock has some potential running to do. Now, he had mentioned another one that he had gotten into, symbol RTI, and he had mentioned that a analyst came out and did a downgrade right here. Now, we had recommended this either on this day here or this day here, and we're taking a little bit of heat on this. Of course, it's not by any large margin. And what I wanted to point out here is, you want to let these breathe, because when we buy up in a new high territory, it's not uncommon for the stock to come back to the 20-period moving average before heading higher again, just kind of coming up, testing, coming up, testing. And so those are some of the pros and cons. You see this over and over again, coming up, testing, coming up, testing, coming up. And, it works the same on the downside as well. Any moving average will do for that. This happens to be a 20-period exponential moving average. A lot of people use that, so it becomes meaningful for people. I just have 4 recommendations for today. Now, what I had done is last night when I ran Cycle Vision, I have been working with some new screens, and what I'm doing is I'm on some of these screens that are in here are a little different from the past. You'll see a couple of them in there are 90% winners. We've been putting out mostly 100% winners. And what I'm doing there is I'm picking stocks where the standard deviation, the variance of the trade, is smaller than the average trade. So what I'm trying to do, what it'll do is it'll stack it up inside of that, which just stacks a little bit more statistically in our favor. And I've gone back and I've tested quite a few of those, and I've really liked the results that I've seen. So a couple of these will be a little different today than you had seen in the past. First one is symbol JOSB. And this stock is already on a big run. It's up 3.7% as I am speaking here on pretty substantial volume. Looks like about 3 times average volume yesterday. And so but we are expecting, on average, about a 13.5% gain on this stock. This is our best rating of the day, and so that's our number one stock. Next is symbol WNC. Wabash National. This one's been in a consolidation mode here for a while, and this is a little lower price stock, which is nice. I have really come to love these lower price stocks because they can really run up a lot in a hurry. This one has recently even actually doubled, more than doubled so far this year. So this stock's taken a little bit of a rest, possibly before heading higher. Next one is symbol AMED, and this stock is from the method that we were using, picking them later. You'll note, or earlier you'll see, is a 100% winner historically, looking for about a 14.5% average win on this trade. It's currently at $56, so to run up to a new high would be about 8%. So this stock would have to go up to new highs in order to meet the average trade from the past. And so keep that in mind, that it's a little harder for a stock to break on a new high without getting some good volume on it. Not to say that this one won't, but things might not be as stacked in your favor on a stock that is technically in this position over some other choices. The final stock for the day is Pool Corporation, symbol POOL. This one has recently pulled back to the 20-period moving average, and we're looking for about a 9.5% average trade on that. And this one is our lowest drawdown stock of the day. And so that's what I have so far today. Now, on some of these stocks, trade a little lower volume. Watch your bid-ask spreads. On this one, I do have a bid-ask spread of a penny right now. But always keep an eye on your bid-ask spreads. You don't want to get into stocks that are too illiquid. But as I open these up and we're running these tests on something on the order of about 7,000 stocks, we do get some stocks in there that might be on the illiquid side. They're not as likely to come up on a CycleVision screen just because of the way it works, but sometimes they can. So always keep an eye on the liquidity that's available to you in that particular market. That's what I have for today. Thank you for joining me, and I look forward to seeing you again real soon.